Hi, I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network. So today we have our EIA show, and we have some things to catch up on when we look at some of the shifts that we've seen. So we've had products that have built and continued to build. Gasoline's building a little bit faster than it normally has and normally does, because at this point you typically continue to see some drops, but now we're actually starting to see builds, which is what we were expecting, just given the boats that we saw in the water, but now they're actually being registered into storage. Distillate continues to be in a problematic spot, especially when you look at where we sit in terms of storage going into winter. And when you look at crude is having its normal draws. So, right now we're in a very normal position for crude. When you look at distillate, still in a bullish position, while gasoline continues to be and move into more of a bearish backdrop. So that's what we want to go through in the first segment, is really look at what is happening overall and what do we expect to continue to happen. Then in the second segment, we're going to go through demand and how gasoline, diesel demand continues to essentially close the summer with a whimper. And we want to look at, is that going to continue through a seasonal slow period? And if it does, how slow is it going to get? And then we're going to wrap it up with refined product exports from other regions. So we've seen a big increase from China and India, but we've actually seen a bit of a slowdown in crude and product exports from Russia and the Middle East. And we want to see, it's like, okay, well, is that a balancing act? Is that going to impact and be a bullish backdrop as we go into the shoulder season? Or are we just starting to see a bit of a rebalance at India and China? And because of that, you're seeing some of these barrels get pushed out from Russia and the Middle East, and that's where you're starting to see some of those shifts. So that's what we do want to talk about in the third segment, to really kind of round out where we see the global, not only crude, but also refined product market. So as we look at what is happening on a global basis, we always have to start with, well, what is global crude oil in the water doing? And you could see it's come down to the low. And as we've been talking about, it's going to just waffle back and forth at this point. When you look at some of the flows that are happening, you can see it goes up, it comes back down. And that's just going to be timed with what is coming from Russia, what is coming from Iran and Saudi Arabia, and how many of those flows are in the market at any given time. So typically, you'll have a bit of a slowdown. You'll have some of these crudes that have been sitting in floating storage try to clear, especially when you look at Asia. And that's something that we're seeing happening right now. We want to go through some of those key pieces here, but also in the third segment. Then when we look at global crude oil in transit, you can see that, again, we're coming to that lower point, and this is that back and forth that we've been saying, that there's only so much that you can put in the water at different times, and that's going to be a big piece in terms of what we've seen to date. So here you're starting to see some of these crudes show up. You've started to see a bit of a slowdown in purchasing from China as well as India, and that's something that we also want to talk about as well. Now, one of the things that happened as we were waiting to film, the head of the Wagner Group was apparently shot down in Russia, and all aboard are believed to have died. Now, there was rumors that he was in Africa, but then he was on the manifest for this flight. So again, this is going to be a very interesting time to see what is happening within the country, and if he did officially perish, or if we're going to see something that's going to come out saying that he was in Africa and this was a test to see if there was something there, or which might be simple and easy, and he was on the plane and he was shot out of the sky. So that's going to be, again, put a little bit more risk into the market when you look at geopolitical uncertainties, some of these things, as there's a bit of an internal ramp up and internal strife within Russia in terms of things that have happened to date. So then when we look at global crude oil floating storage, you can see that floating storage remains fairly range bound. It's not moving as quickly. Like when you look at floating crude oil in transit, that's come down, but floating storage is staying pretty flat. So typically floating storage crude oil in transit comes down, floating storage goes up. But they're timing this now a bit better and getting some of these barrels off the water, but they're not doing it as quickly, because as things are coming out of transit, they're still replacing what's in floating storage. To give you an idea of what was there, as they kind of pick things up on the floating storage side, then you'll start to see a bit more barrels come into transit. So just to take away some of the questions across the crude oil supply adjustment factor, you can see that it's fairly negligible at this point, and that's something that it's always going to be kind of something to watch when you look at imports, exports, and the like. Now we look at crude stocks. There we had a draw of 6.13 million barrels. When you factor in what came into the SPR, there was a draw of 5.54 million barrels. So again, we're still seeing some builds coming back into the SPR. And remember, some of the early barrels were lent out; they were not sold. So the 5-year average is down 14.7 million. We're against the 5-year average, we're down 14.7 million. And then when you look at year over year, we're actually up 11.9. So it's just a matter of kind of balancing these different factors. Pad 3 is still very elevated, as well as Pad 4, which isn't as much, but Pad 3 has that additional as we continue to see Pad 2 and Cushing draw down. So Pad 2 had a drop of 3.32 million, but yet we had a big increase in Pad 2 imports. So we're going to want to look at how those imports are going to impact these draws, because we should start to see that show up in this component. When you look at some of those imports, Cushing had a nice draw. That's something that, again, we have to weigh in terms of what's going to come next, as we did get those increases as we talked about. So we look at crude oil inventories, excluding SPR. We're tracking right where we were in 2019 and 2021. You can see that there's typically those draws as we get into September. So really not too much to say one way or the other. The biggest issue, and we keep talking about it, is the rate of change. So what is the rate of change against seasonal norms? And we should be having draws. Like, this is a typical drawing period. So the question is, are the draws steeper? Are they just moving along the same line? Because right now we're tracking right where we were in 21 and 19. So very normal, especially when you look at that clustering as we get into that September 6th date. Then we look at commercial oil storage and products. You can see that we're continuing to have those slight draws. Typically, we have those draws until we get into September, and then we start to see that balance back up. Gasoline, this doesn't look as bad until you break it into its pieces and see that gasoline builds have actually had a counter-seasonal pop, while we still have distillate continuing to show a lot of elevated levels. When you look at Pad 3, this kind of gives you an example of where we sit, where 2016 as well as 2020 are the only times that we were higher. When we look at 2021, we're right at these levels. So we're still in a very elevated spot when you look at Pad 3 specifically. So it's important to kind of weigh some of these different pieces. Then you look at Cushing. Cushing had a nice drop. We were expecting it to be fairly flat, but instead we had a nice drop down. And you can see we've had these drops previously, obviously from higher levels. So here it's a little bit softer. Excuse me. It's a little bit sharper here, but we do expect to see a bit of a recovery, just based as those imports start to show up, and then exports, as we've talked about, it are a bit lumpy. Some of those exports slow down a bit. So then when we look at runs are fairly in line. Typically we sit between this 94.5, 95.5. This is likely the high. 94.7 is likely where we're going to be for another week or two. And then as we get into September, you start to see some of those seasonal slowdowns as we get into the fall months. Pad 2, Pad 3, everything's kind of holding in fairly firm. It's not too much to say one way or the other, especially when you look at the seasonal data. The seasonal data is showing, we're right kind of within this level going forward. So not too much on the refined capacity front. Imports dropped 224,000 barrels a day. That was driven by Pad 5. So Pad 5 had a big spike. Now we have a big drop. We're still above the 5-year average. So remember, we've said Pad 5 is very lumpy. Here's just another example. But Pad 3, we said that the drop was going to happen. It was just going to be a bit softer because there's a decent amount of barrels that are still sitting in floating storage. You're starting to see some of these movements. So again, we're still below the 5-year average, but a little bit closer to where we have been in the past. Pad 2 had a big makeup number after that big drop. We're up 526,000 barrels a day. That's 400,000 over the 5-year, and we're going to continue to see a lot of that elevated level. And here's just putting the pad 3 into context. As you can see, we've been saying that it was gonna stay below the 5-year average, but again, hug it a little bit closer. We weren't gonna get the bigger drop. It was just gonna go sideways and get a little bit closer, still at the bottom of the cloud. But as you can see, tightening up just a bit. And then pad 2 had that big makeup number. We expect to stay above that 5-year average, and it's going to continue to remain at an elevated point. Now, when we look at implied demand, as we've been saying, we expect it to be just, slightly actually above 9 million on gasoline. Here, the EIA is saying that we're at 8.9. That's an increase of 59,000 barrels a day, but you can see we're very much on the lower end, and we still remain below that 9 million point. We're at the back end of demand, and then it's only going to continue to slow down as we get into September after Labor Day. We will get one bump, which is going to come for the Labor Day weekend. We always get a nice big spike, and then it should drop off fairly quickly. Distillate demand continues to be a bit softer. It had an increase of 188,000 barrels a day, but still coming down a bit, and we see more pressure in the near term, and then we do get a little bit of a bump coming forward, but we'll talk about that in the next segment. Jet fuel, we're staying between 1.55, 1.65. It's just going to be a matter of that balancing act as propane, propylene dropped a bit more by 270,000 barrels, coming in just by 26,000 below the 5-year. So other oils is an interesting one. We haven't really talked about it because other oils is a bit of a catch-all. And the problem is when you look at implied demand, there are times where the other oils is a lot of NGLs, it's a lot of natural gas liquids, and it can get cycled back into the refiner. So instead of it being actual demand going into the market, it's going into the refining world and being run through alky units, reformers, topping units. So that's where, even though it looks really good at times, it's just feeding back into the refining capacity and not actually hitting the market, but living within its own universe. It's just a matter of where is it being registered. So that's why other oils is a bit of a catch-all, and it's not, I don't want to say it's not clean demand. It's something that is just how the refiners are operating, given the fact that there's a significant amount of natural gas liquids and condensate available, and they can try to adjust the mix and try to avoid some of that light oil going into the topping units, or mix the light oil with some of the condensate and some of the NGLs to increase aromatics. And these are some of the different pieces. So it's not a clean representation of demand. And that's why we like to focus more on the movement fuels, if you will, or motion fuels in terms of things that are going to drive us and the economy. And that's showing, in terms of where we are in terms when you look at implied demand, we're at levels that we haven't been at since obviously 2022, 2020, but then the last time was 2014. So you can see we're still hugging very much at the lower end. We never got that bump back up, and we continue to bounce sideways. Days of supply, very normal on the crude front, not too much to say there. Gasoline storage. One of the things that we had said is that we saw these cargoes, and we thought it was going to show up a bit sooner. And you can see now it's starting to have those kind of counter-seasonal builds, which we've seen in the past. It's not like this is a huge surge and it's something that has never happened. It's just you're starting to see this flattening. And that's what we've been talking about, is that we're not going to get these draws. We're going to go sideways. And you could see that the rest of the other years are continue to have draws. So the comps are going to get easier, and we're going to get much closer to quote unquote seasonal norms as we get into the September months, into the end of September, where distillate had a build, but you can still see how low we are in comparison to historics. And then jet continues to track, right around seasonal averages, because it's that balancing between distillate and kerosene that's going to continue to keep that there. Now, when we look at the curve, you can see that the curve has flattened a bit, where you've had the front months, but the whole thing is shifted down a touch. Obviously, the front months came down harder than back months, just because there is that support when you go further down into the future, where you do have a bit more of that shortage that people are calling for now. Obviously, we're talking about demand issues and some of those limitations, which again are going to keep us fairly range bound here. And then here's the floating storage that we talked about in the Gulf Coast. That's not something we see this staying fairly right around these same levels. We do see it creeping higher a bit, and that'll again incentivize a bit more of those imports into floating storage from floating storage into onshore storage, which is the timing that we've discussed in the past. So on the next segment, we're going to go deeper into U.S. demand, where U.S. demand sits, and how that's going to play out in the last few weeks of summer, and then as we head into shoulder season and the start of fall.